Everyone indeed has the potential to become wealthy, but certain people do things that cripple their wealth. But as long as you can recognize and correct these, you can always change your ways and secure your wealth. Hello and welcome back to the Finance Guardian channel. So for today's video, we'll share 11 things that will destroy your wealth with you. Don't forget to hit that subscribe button and the bell beside it. Let's get started. Number 1. Alcohol. Some claim that drinking a bit of wine every day is actually good for you. Nonetheless, alcohol is one of the leading causes of death and disability worldwide. Have you ever taken the time to reflect on the financial implications of drinking? More than 499 million liters of alcohol have already been consumed in 2021 alone. Yet the wealthy and well-educated are the ones partaking in this joyous affair. It's best to avoid this because we've all heard those stories. The ones that were once at the peak of their careers, both in title and in income, those people lose their jobs because they just drink too much. Number 2. Unprotected assets. It is important that your life, your property, and your ability to work are all protected. Life insurance can ensure that your family has income if you pass away. Automobile and homeowners insurance can provide you with liability coverage if you injure someone or your home or car is damaged or destroyed. Having disability insurance will also help you protect your wealth if you cannot work. Number 3. Buy now, pay later, BNPL. Digital installment plans or the buy now, pay later model are among the things that could destroy your wealth on the rise. If you haven't heard of them, BNPLs are your parents' versions of layaway on steroids. That means if you want something and you can't afford it, BNPL lets you purchase the thing that you're eyeing and take it home for a fraction of the price. Then you will make installment payments over 6 weeks until you pay it in full. While many BNPL brands guarantee no interest, the late fees are where they catch you. You can avoid this by only buying what you can afford. Why not wait until you have the money in hand before spending money you don't have on something you're most likely to forget about in 2 weeks? Set yourself up with a budget. It's the most effective way to keep track of your money and your life. Number 4. Lack of financial literacy. Money is an essential part of every person's life. It plays an integral role in our daily lives. This means that we are adept at handling finances, right? Actually, we're not. There is a shocking amount of illiteracy in financial matters in the modern world. Today, the vast majority of people have earned bachelor's degrees. While we claim to be educated in a technical sense, we aren't exactly literate regarding financial matters. It's worth reiterating that generating money is not only about spending money. Money is earned, spent, saved, borrowed, and invested wisely in an efficient money cycle. Number 5. Losing track of your money. It is definitely a no-no to ignore personal expenses and income. Maintain a financial awareness of the money you spend, the money you earned, and your financial goals. Budgeting your income and expenses is one of the most effective ways to learn how your money is being spent and to find out how much money you really have. Number 6. Debt. Now, don't get me wrong on this. Having debt isn't always a bad thing, as it helps salvage a failing business or even fuels an income-generating stream if it is used strategically. I'm talking about student loan debt and credit card debt in this case. These two have stuffed out the American dream with $1.6 trillion worth of student debt in the United States alone. Don't get caught up in the enticement of attending a more prestigious university than you can actually afford. This can cause you to take on debt that will take a long time to pay off instead of attending a local university that charges a lower tuition fee. Scholarships and grants might also prove helpful. As a result of student loans and credit card debt, most college students end up in very deep debt after spending their entire college years purchasing things they can't afford in cash. Many of these debts are carried into their adulthood, leaving many shackled with massive debts. The truth is that many people end up broke despite getting a handsome paycheck at the end of the month because they spend so much of that income on paying back all the debts they have accumulated. Number 7. Impulsive buying. We must admit that impulse buying is kind of fun, at least in the moment. For instance, you go to Target for diapers and before you know it, boom, your cart is full of unnecessary and unplanned things. It's actually quite normal for this to happen. The average American spends $276 impulsively every month. Each of these expenses adds up to $3,312 every year and about $198,720 over the course of a lifetime. Researchers have found that impulsive shopping increased during the COVID-19 pandemic. There may have been feelings of anxiety and stress associated with spending more time at home. In this example, we can see how people using shopping to cope with emotions, reduce stress, and improve moods. In order to avoid destroying your wealth, you need to plan your spending. Don't spend on something you don't really need, or don't bring your credit card with you to the mall. Even better, avoid the mall when super sales are taking place. Plan your purchases so that you don't end up sabotaging your finances. Number 8. Excessive use of credit cards. We all love freebies, and credit card companies know that. Offering you all this free stuff is their way of getting you to sign up. Yeah, we understand you want the free pizza and t-shirt you get when you apply for a credit card, but before you know it, you can rack up a ton of debt. So whenever the sleazy credit card companies call, remember that you have the right to say no. And let's not even mention the rewards points they promise you. Discounts, airline miles, and cashback are all ways just to get you to use credit cards more and fall into even more debt. As tax and other hidden fees are added in, the rewards turn out to be substantially less satisfying than you expected. You shouldn't play the credit card companies' game. The risk isn't worth the reward. Keep more of your money in your own pocket by being smart, avoiding debt, and avoiding unnecessary expenses. Number 9. No emergency fund. An emergency fund is like not having an extra bottle of water with you when you go hiking, since the instructor told you that you'd be back in 6 hours, only to find out that your only water bottle fell off a cliff and left you dehydrated. The point here is that life is unpredictable, so having an emergency fund on hand is so critical. There's no written rule regarding the amount of money you should keep in an emergency fund. Many people say you need to save triple your monthly income while setting a certain amount. Nonetheless, we are certain that you may destroy your wealth if you do not have an emergency fund in the case of an accident or calamity. Number 10. Gambling. The basic principle of gambling is that the dealer always has the upper hand. You should resist the urge to take a risk if you think you are one hand away from winning. This is just a scam designed to take advantage of you. You might be on a winning streak while playing slots or cards, but in the end, the house always wins. Casinos have well-planned illusions in order to keep you as long as possible. The staff will offer complimentary refreshments, and you will be tricked by the environment's non-existent natural light, making it impossible for you to tell the time. Our addicted brothers and sisters are estimated to lose between $55,000 and $90,000 a year in the gambling dens. And that's already enough to start a business that has the potential to generate enough income to sustain your lifestyle. Number 11. Eating out. Approximately $3,000 is spent each year by the average American household on eating out and dining out, on average 5.9 times a week, according to BLS data. That's 5 times what you would have paid for prepared food. Let's not even mention how much time you wasted waiting for your delivery to arrive, or how much time it takes to pick up delivery by yourself. Cooking your meals at home would save you a lot of money each month. You can put this money in your emergency fund to prepare for a rainy day. This will save you money and give you the chance to have a hot meal every day. It will help you keep track of how many calories you're consuming. Even better, you can customize your meals to your liking without worrying about the restaurant forgetting to add that extra gravy again. Also, cooking your own food is healthier. And that's all the time that we have today, folks. We hope you enjoyed this video, and if you did, please hit that like button. If you're new around here, subscribe to our channel to remain updated about all of our future videos. We'll see you next time.